Hello traders, Rich here, and here's a quick but detailed update on GBPUSD. As usual, if you guys like video analysis, let me know in the comments or simply leave a like. So let's get started. As we clearly see, GBPUSD has been overall bearish for a while, making low lows and lower highs, and we are currently in a correction phase, retesting a previous major low and also a supply zone as we had an aggressive movement down from it. That's why we'll be looking for trend following sell setups on lower time frames, and of course, as we approach the previous demand here, we'll be looking for buy setups. But for now, let's take it step by step. Overall bearish, retesting a supply. Let's zoom into lower time frames and look for sell setups. That's also the trend line from H4, adding more strength to our uh, supply zone. And if you zoom in low, we can see that the bulls already took over here. We are trading higher, and for now we are waiting for the next impulse movement to start. As per my trading style, I'll be waiting for this low to get bigger, for it to be major, and then I'll be selling on its breakdown. For example, it could be this area, but first, as mentioned, I'll be waiting for this to happen and then sell on to break downward. When the sell is activated, the stop loss would be above the previous swing high, and we target a 1 to 2 risk to reward ratio to have an edge over the market from a risk management perspective, and which would be around this demand zone from daily time frame, where we'll be looking for buy setups. But for now, that's what we are looking for. And of course, uh, when the before the sell is activated, GPUSD would be bullish before breaking downward, or even can still trade higher and break this resistance upward for further bullish movement. Before we continue, I want to tell you about Tickmill. Tickmill is established in 2014 and is one of the leading Forex and CFD brokers with registered users from more than 200 different countries. Tickmill is an no-dealing desk and ECN broker regulated in many countries like the UK, Cyprus, and recently in South Africa. With Tickmill, you can trade a wide range of instruments, starting from Forex to indices, commodities, and even crypto. Most importantly, with very low spreads and trading fees. If you don't have an account yet, make sure to create one using my referral link in the description below to benefit from 5% discounts on your trading fees. And let's continue. As we clearly see, USDJPY has been overall bullish for a while, making higher lows and higher highs from a long-term perspective, trading inside this giant rising brown channel. However, we are currently approaching the upper trend line in brown, acting as a non-horizontal resistance, or what I consider an overbought zone. Moreover, we've got this supply zone, a previous major high from monthly, acting as a resistance zone. That's why this zone a very strong area to look for sell setups, as it's the intersection of a horizontal and a non-horizontal resistance. Of course, meanwhile, we'll be looking for sell setups unless we have an aggressive candle close above it. In this case, further movement higher to the 160 would be expected. But for now, let's take it step by step. From daily time frame, we are currently trading inside this rising broadening wedge, and we are also approaching the upper trend line, acting as a non-horizontal resistance. That's why we'll be looking for the setup. So now we've got three rejection zones: upper orange trend line, upper brown trend line, and the green resistance. Of course, we know that USDJPY can still dive inside the zone to the 147 or even a little bit higher before we trade lower. That's why we don't sell blindly. We always look for extra confirmation that the bears are taking over. If we zoom into H1 time frame, we can see that price is currently retesting this minor supply zone. We are looking for sell setups, and yes, as mentioned, we can still trade higher. If we trade higher, we'll be looking for sell setups around this area. Here we go. But for now, since we're around the resistance, we start to look for setups starting from here. We have a channel forming and a consolidation in the shape of a rising channel or a head and shoulders. But anyway, for now, that's our last major low. So I'm waiting for a candle close, an aggressive momentum candle close below it for the bears to kick in. When this happens, the stop loss would be above the structure, above the previous major high. It can be here or here. It depends on how the break happens, and we target a 1 to 2 risk to reward ratio, which would be around this demand zone and the lower trend line from daily time frame in orange. Meanwhile, until the sellers take over, USDJPY can still trade higher as mentioned. In this case, we'll be looking for setups around the upper band. Best of luck, and I'll see you on the next one.